about the safety of your mutual funds and stocks? Well, worry not, as SEBI is here to protect your equity investments. Securities and Exchange Board of India, or SEBI, the regulator of Indian capital markets, protects the interests of investors in the stock market. Hello and welcome. I'm Mayashri from Clear, India's largest tax and financial services platform. At Clear, we have assisted more than 6 million tax filers so far. If you have not already, do subscribe to our channel to support us. Let's get started. But first, why was SEBI formed? The Securities and Exchange Board of India, that is SEBI, was established as a statutory body on 21st February 1992. It regulates the capital markets in India. During the late 1970s and early 1980s, when the Indian capital markets were developing, multiple malpractices threatened to derail its growth. Malpractices such as unofficial private placements, price rigging of shares, violation of stock exchange rules, and delay in the delivery of shares were prevalent. SEBI was formed to end these malpractices and protect the interests of investors in shares, mutual funds, etc., called the securities market. SEBI creates a conducive environment to raise money from the Indian capital markets, which is a market for equity and debt securities, through regulations and guidelines. SEBI regulates stock exchanges and securities market intermediaries like stockbrokers, merchant bankers, sub-brokers, portfolio managers, foreign institutional investors, etc. Moreover, SEBI educates investors in shares and mutual funds through education and investor awareness programs and runs a comprehensive grievance redressal system to protect investors. SEBI also inspects and audits stock exchanges and stock market intermediaries and penalizes entities that indulge in unfair trade practices. Let's look at the table showing the role of SEBI in investor protection. SEBI conducts workshops so that you can make informed investment decisions while investing in stocks and mutual funds. It also publishes cautions through the media to protect your interests. SEBI responds to investor queries over emails, telephone, etc., and even in person if you visit the SEBI office. Its rules state that issuers and intermediaries in the securities market disclose relevant details about themselves, the products, the market, and the regulations. SEBI ensures that the market has systems and practices to make transactions safe, such as screen-based trading system, dematerialization of securities, and T+2, trade T+2 rolling settlement. How does SEBI address investor grievances? If you have any issues with the securities market, you can lodge a complaint online with SEBI through its online platform, SEBI Complaints Redressal System, or SCORES. SCORES help you lodge complaints about the securities market with SEBI against listed companies and SEBI-registered intermediaries. The common SEBI-registered entities against which you can lodge complaints are portfolio managers, mutual funds, stock exchanges, stock brokers, depository participants, etc. For instance, suppose you have a complaint against a company or a SEBI-registered intermediary, you must first approach them to resolve your issue. However, if they fail to resolve the issue to your satisfaction, you can approach SCORES to look into your complaints. Some of the common issues you may bring to SCORES are about the transfer of securities and non-payment of dividends by listed companies. SEBI encourages you to use the SCORES portal and SCORES app to lodge complaints pertaining to stocks, mutual funds, etc. and enjoy a quick resolution of the problem. How to file your complaint through SCORES? You must first lodge a complaint directly with the offending entity, which can also be done through the SCORES portal. The entity would have to file an action taken report within 30 days of receiving your complaint. However, if it fails to do so or you don't receive any communication from them, you can lodge a complaint on SCORES. You must mandatorily provide information such as name, permanent address, PAN, email address, and mobile number to register with the SCORES portal. Your username and password with SCORES will be sent to your registered email ID. After logging on to SCORES, you must click on the complaint registration under investor column. You will have to provide complaint details by selecting the right complaint category, entity name, and nature of the complaint. You can also attach a PDF document up to 2 MB as a supporting document of your complaint. After successfully submitting your complaint, the system generates a unique registration number displayed on the screen, which must be noted for further correspondence. Do note, when filing your complaint with SCORES, you will be asked if you have already raised the issue with the company. If you choose no, then the complaint will first go to the entity which has 30 days to respond to the issue. If you answer yes, then the complaint will go to the SEBI directly. Do take a look at matters which are not considered as complaint by courts before lodging your grievances. I hope by now you have understood why SEBI was formed. If yes, write clear in the comments below or drop your questions if any. Stay with me to know how SEBI gauges risk in equity funds. How does SEBI help you gauge the risk in equity funds? SEBI introduced the riskometer for mutual funds in 2015, assigning risk levels as low, low to moderate, moderate, moderately high and high. The risk in any mutual fund scheme was labeled based on its category. Mutual fund houses used to show a pictorial representation of risk level on a scale of 5. Low, principal at low risk. Moderately low, principal at moderately low risk. Moderate, principal at moderate risk. Moderately high, principal at moderately high risk. High, principal at high risk. For instance, the small cap fund category was assigned as moderately high risk level. However, this method had its fair share of problems. Say a large and mid-cap fund with higher exposure to mid-cap stocks is riskier than a fund of the same category with lower exposure to mid-cap stocks. However, the risk labeling for both funds would be the same. SEBI recognized the shortcomings of this approach and came up with new guidelines to determine risk grades in October 2020. The riskometer methodology for equity funds factor in the 3 parameters of market capitalization, volatility and impact cost liquidity to assign risk grades. Market capitalization. Under this approach, a mid-cap stock will be assigned a higher risk score than a large-cap stock and a small-cap stock gets a higher risk score than a mid-cap stock. For instance, an equity fund investing a higher proportion of its assets in mid-cap and small-cap stocks will have a higher risk score based on the market capitalization parameter. Volatility. It takes into account a stock's daily up and down movements. For example, the higher the daily volatility of a stock, the higher its risk value. Impact cost. The price of some stocks could move considerably after a significant transaction because of the low trading volume. The fund manager would have to buy the stock at a higher than expected price after a large purchase transaction and sell such stocks at a lower than expected price if there is a huge sell transaction. It is called the impact cost, which increases if a stock has low trading volumes or liquidity. Equity funds whose underlying investments are more volatile and less liquid attract higher risk scores based on these parameters. Riskometer, which is effective from January 1st, 2021, depicted by a pictorial representation. The 3 risk scores are aggregated to a simple average to determine the fund's overall risk score and bucket it into one of the 6 risk labels. If the average is 1, then the risk label will be low, which means the principal is at low risk. If the average is 2, then the risk label will be low to moderate, which means the principal is at moderately low risk. If the average is 3, then the risk label will be moderate, which means the principal is at moderate risk. If the average is 4, then the risk label will be moderately high, which means the principal is at moderately high risk. If the average is 5, then the risk label will be high, which means the principal is at a high risk. If the average is 6, then the risk label will be very high, which means the principal is at a very high risk. According to the riskometer, different funds in a category can have different risk grades if their underlying portfolios differ significantly. SEBI had recategorized mutual funds in 2017 to help you invest according to your risk profile. SEBI guarantees that the securities market has framework and practices which make stock exchanges safe. Thank you for watching this video. If you have any queries related to investment and taxes, please comment below. We will address them as soon as possible. Stay tuned for more updates and don't forget to subscribe to our channel for finance related content. Take care and goodbye.